Hello, good afternoon. Well, this Friday it's been a choppy ride for the market. There have been a lot of ups and downs for the Nifty, but for now we are holding in the green very minutely, if at all, because at one point of time we had tumbled quite sharply below the mark of 21,250, but now holding on to 21,300, so down 100 points from the day's highest point, but at least off the lowest point of the trading session as well. That's how the structure of the market is right now. It was a bigger tumble that we saw in the Bank Nifty because that index had suddenly slipped as much as 600 points. It still continues to languish with a cut of almost 200 points, but the biggest laggards there were HDFC Bank, ICICI Bank. These were the heavyweights that were dragging the market lower. You also have sectoral gainers coming in the sense of autos and realty. So you're seeing a bit of a bounce back there. But then, of course, you also have dollar which has taken a bit of a skid. Metal stocks are gaining ground on account of that because usually they have an inverse relationship. But if you look at the overall global market texture as well, it's a bit tipsy-topsy, and I say that because when we started off the day, the futures were suggesting a green. Then the Dow futures slipped down as much as 150 points. Right now as well, it's down almost 100 points, and even the European markets have started a bit on the back foot. So we are not alone. This ride that we are seeing in terms of the roller coaster is something which is across the globe.
Yeah, it is, and you could, really map that up since day before, because day before when we cracked hard from that peak of 12,550 plus thereabouts, we weren't alone in that fall. Yesterday's recovery, we weren't alone, and today's volatility and flattish move now with the negative bias, again, we're not alone. Not just European markets, but I also want to check in on what the US futures as well may be up to, because there too, you're not really seeing a material move come by. But that said, let's take stock of what is happening in the market right now, because it's really a stock-specific day, as has been the case throughout the week. So, if you were to pick up some of those big performers and news-based trigger stocks, that's AstraZeneca, JB Chemicals, Pinamal Pharma, you've got a Gland Pharma, Laurus, Divi's Labs. They are the ones which are really the entire pharmaceutical space, which is holding out very well, along with, of course, chemicals too. All Cargo Logistics, we chatted with the management earlier today, and they're talking about the transaction being EPS accretive for all businesses. They're expecting a bounce back in their ICS business come second half of FY24. That's one stock which has held very, very steady in trade. GAIL as well, a beneficiary of the global fall in oil prices. That's been holding up very smartly in trade. In fact, a couple of brokerages like an Incred have upped their price target as well. And it's now, put an add to it from the previous hold. So an upgrade, and target price is now put at 200 as opposed 121 earlier. So these are a bunch of stocks which are looking extremely active. GAIL now holding up 8%. There's Nalco, Hindustan Copper holding out very smartly. Chambal Fertilizers, which is also up about almost 4.5% in trade. And then Wipro will just come up for you on your screens as well, because that's a very, very steady mover. And the intraday graph will actually tell you that the spike has come in the last 2 odd hours or so, because up until then, it was having a very flattish, with a positive bias kind of session, but that big move has jumped up now only 6%. Anisha, are we missing something on Wipro?
No, I was fearing you'll ask me that question. There's nothing at all, because even I was looking for it like since half an hour. Is there something that I've missed out on? I couldn't find any news flow to support that.
Okay, we will wait for the news flow to arrive. Although, having said that, IT has been seeing some sporadic buying, so maybe today is Wipro's turn. But that said, let's take it across to our experts and find out what to make of the market. We have Shrikant, Chauhan, Nooresh, Merani joining in on the show right now. Nooresh, hi, afternoon. Let me start off with you first. Once again, getting a little choppy, aligning ourselves with what the global markets as well are up to. What next on the cards for the index? Nooresh, snap that line. Shrikant, the same question to you. What's the reading on the index now?
Yeah, good afternoon, everyone. I think the market is consolidating. We saw good amount of sell-off on the day of just before the expiry of this particular week. But later on, we saw good equal amount of recovery from the lower levels. Now, the way the market has formed its overall technical formation, I think it is going to spend time between the range of 21,400 and 21,000 on the downside. So on the dismissal of this particular range, we can expect activity in the market Otherwise, we are expecting stock-specific activity, or maybe the activity will shift into defensives. And maybe that's the reason we are seeing a lot of activity in technology as well as in pharma companies. So broadly, we are of the view that if there is any correction, then we should look for adding some positions, or otherwise we can expect short covering above the levels of 21,400.
Nooresh, what is your sense on the pattern that you're seeing today on the Nifty Bank, considering that's what's leading the fall?
Nifty from the lows. So if we look at the Bank Nifty futures for the current month, we started correcting previous day around that 48,200, 48,300 mark was high. We corrected down to 47,000, and yesterday and today we came back to that 48,200 levels. So that has become a resistance on the near term and 47,000 on the downside. So that clearly tells you that we are trying to form a range in the Bank Nifty. Yesterday it was HDFC Bank supporting, which is not seeing a follow-up move today. So overall, time for some range-bound consolidation on the Bank Nifty as well as in Nifty. Like 20,950, 21,000 seems to be the base on the Nifty, 47,000 on the Bank Nifty. And on the upper end, 21,400 would roughly be a resistance as of now, 400, 450. Same way, 48,000. So we would get range-bound, and we could see more stock-specific action, maybe some selective action in the mid-cap and small caps also. So time to be more stock-specific. Index could consolidate for a few sessions here.
But since we're talking about GAIL, listen to what the management had to say, because they talked about how the marketing margins are likely to expand going forward. Listen in.
Last year's volume marketed by us in domestic market was around 83 MMSCMD, which has gone up to 93 MMSCMD plus in current financial year, and there is a significant jump, and we expect it to grow further. In terms of average volume supplied marketed by us last year was 94, and we expect that when we exit on 31st March it will be around 100 MMSCMD. So all these factors have enabled GAIL's marketing margin to increase, and we have given guidance when we met on earning calls or with investors. We said that in whatever situations happens, we'll earn at least 3,500 crore rupees as profit before tax in this segment. But we are reviewing our guidance because we have almost touched these figures in this 6 months. So we are reviewing our guidance. Will come back when we end this quarter. So we are optimistic that at least we'll be beating our projections significantly. And in terms of next year, we expect that at least I can say at least we'll earn 4,000 crore rupees at profit before tax from this segment.
Okay, so that was the management just a few days ago when they talked to us about how they're looking at increasing guidance. But Nitin, Raheja from Julius, Baer also joins us on the show. Nitin, this year has been marked by the comeback of all of these oil and gas PSUs, right? What's been your take on the same? Because there was always this regulatory overhang which challenged the institutional investors not to participate in it in a big way. Do you think some of those worries are getting abated now?
I don't think so. I mean, I don't see anything which has significantly changed from a regulatory perspective, right? So I think if you look at it, these are good short-term tactical plays. I think they're benefiting from the fact, at least the OMCs, from the fact that crude has remained relatively benign, so they haven't faced those pressures. And I think if in the next couple of months, before the election code comes into play, crude remains benign, then I think they'll be good. In fact, for a good part of the next year. But fundamentally, the fact that there is, they don't really have complete freedom, and there is interference from time to time from the government and the ministry, don't make them long-term sort of strategic compounders. At the most, they are good short-term plays. That's how we look at it.
You look at them only as a tactical trade and not long-term ideas, but would you extend this argument to PSU banks as well? Because there as well, there has been massive re-rating, and the biggest factor there was that the valuations are cheap, and now even the fundamentals are turning. What's your view on PSU banking space?
Look, I mean, nobody can argue that PSU banks valuations are cheap, right? And they were cheap with reason, primarily because their capital adequacy is among the lowest if you compare it with their private sector peers. Also, when you look at return on equity at around about 1%, and you compare it with their peers who are almost close to 1.5, 1.6 plus, there is a big difference, even the quality of the book. But in this rally, one of the things that we've seen is the present government has talked about bringing more accountability in the banks. They've talked about looking at underwriting norms and how it can be improved for the PSU banks, and hence we've seen this big rally. I think in a benign credit cycle, also the fact that if interest rates to look to be cut in the second half of this year, the large investment book that these banks are sitting on should help them. Also, they have very strong liability franchises, and in a time where most banks have been struggling to add their deposit and CASA base, I think that they are well placed. And so there is legs in that rally yet. And I think the broad direction that the government has set for them makes them look yet attractive.
So there's still some, value on the table perhaps for some of these public sector banking names. I want to shift focus and talk about the pharma sector now, Nitin, with you. Today, if I look at the stock prices, AstraZeneca is up 9%, Piramal Pharma spike of 8%, Concord Biotech up 8%. You also have other names from the entire space and the entire value chain. JB Chemicals, for instance, is higher. Loris, Divi's, all of these names are seeing quite an amount of excitement as well. Within APIs and CDMOs and biosimilars and manufacturers, etc., and I'm specifically talking about pharma, not including hospitals and diagnostic here. Within pure pharma, what are the names or which are the themes that you like?
So I think clearly the domestic pharma theme is today looking well placed, and they've shown consistency in terms of their earnings growth. They've shown the fact that they don't have a lot of the overhang that exists for generic pharma. So, and hence they get valued, at more attractive prices than even the generic pharma business. Having said that, this sector has had such a chronic underperformance over the last couple of years, with the generic pharma business also seeing a bottoming out of prices. You're seeing some of that, and CDMO. So I think overall, if you look at pharma, it's quite well placed from a valuation perspective, and it's had this dramatic underperformance over the last many years, and hence coming back of the pharma is expected. We do find CDMO space a little overvalued, and there is a lot of future expectation built into prices, and there is scope for disappointment out there. It's an exciting area, no doubt, and there are a couple of leaders in the space, but to expect a lot of the smaller companies to sort of catch up on the leaders, it is a long haul. So we do think that there is a little bit of this. On the API space, I think it's clearly looking attractive from a price and a valuation. Of course, the business doesn't have the same kind of economics as you would have in Indian pharma or generics, but clearly the valuations stack up in their favor, and hence you're seeing the API companies show a good rally in the last few.
Okay, Nitin, stay with us. We've got an exclusive story coming up, which you may also want to, listen into. And we're learning now from ETNA's reliable sources that Torrent Pharma has actually withdrawn its non-binding bid to buy out the founder's stake in Cipla. For more on this story, let me take it across to my colleague Anurag Joshi. Anurag, what are you picking up on this?
Yeah, so Torrent Pharmaceuticals, which was the front runner to buy the equity stake of the promoters in Cipla, has withdrawn its non-binding bid to purchase this stake. Now, this follows differences basically about the lack of consensus over the terms of a possible deal and over the valuation. Now, the Cipla's promoters were looking to sell about 33.5% equity stake in the company, and Torrent Pharmaceuticals had emerged as a front runner in the deal, and it was seen by analysts as a like-to-like acquisition where a strategic player is buying the stake. Now, in the recent past, the Cipla promoters had agreements over the terms of the transaction and also about the valuation. Torrent Pharmaceuticals had been looking to tie up with some private equity funds and also had tied up financing for this deal. Now, in the past, the other contenders for the deal were American private equity firm Blackstone, which had in September withdrew its bid, and Dr. Reddy's Labs.
Okay, so that's the latest coming in as far as Cipla story is concerned. For the longest time, we were talking about how Torrent could be picking up that stake of the Hamid family in Cipla, but seems like the talks are off the table now. There was a lot of flip and flop about the valuations. Finally, it seems like that deal is not happening. More importantly, rather than Cipla's stock price, we should focus on Torrent, Pharma's stock price as well as to how that is reacting, because the street had factored in that there could be an acquisition that might happen at higher valuation. Now that's not going to happen. That's the reason that stock is actually seeing a bit of a spike, because the worry about capital allocation, how they will get the money and at what price are they going to buy Cipla, because clearly it wasn't getting offloaded at a cheap price at all, was the worry, and that's the reason now you're seeing a bit of a spike. Actually, Torrent Pharma is concerned. Let me bring Shrikant as well on the charts, at least for now, on Cipla and Torrent Pharma. Shrikant, if you just had to read the charts, what would be your recommendation on the stock prices of these two names? Shrikant, the question is to you. I think you'll have to unmute yourself. Sure.
Yes. Yeah, so if we go through with the technical pattern of Torrent Pharma, then I think there we are seeing good amount of activity and buying interest. In fact, since last 2 days, if we see the pattern, then somebody was like consistently buying the stock at lower levels, and today it has broken its swing high. So based on the technical formation, it is heading for the levels of at least 2300, 2320 in the near term. Even at this level, it's a buy because it is into a proper technical setup. But for Cipla, I think it is going to spend some time because it failed to surpass the level of 1250 and it is consolidating. So maybe now other worries will keep the stock under pressure. But at this level, Torrent Pharma looks really good.
Speaking as well, Torrent Pharma looks very strong. And of course, now, Aisha, the fact that there is not going to be buy at any price or buying at a hefty valuation, and at least a clarity emerging in terms of now there's a withdrawal and there's no deal in the making of sorts.
Yeah, and the street you can see as is the sign on the line graph right now. The street is actually liking this clarity because such a large acquisition going outside of their portfolio is not something that the investor fraternity was comfortable with. I mean, yes, on paper it did make sense, but a large size acquisition now off the table, and you can see that stock relief come by. The stock now holding up a good 1.5% in trade, and that's exactly the price action that you saw from Zomato as well. As soon as the clarification came in from Dipinder Goyal, although it came in much later in the night yesterday, but today the stock started off the day at least with well amount of green, and now as well at 127, it's pretty much at an all-time high. We'll take a very quick break on that note. When we come back, we'll continue our discussion with all of our experts and Nitin Raheja.
Trades on ET now, and for now you have Nifty, which is 21,350. You have Bank Nifty, which is a 200-point lower, but it's the broader markets which are actually outperforming yet again. Wipro is the stock that you need to have on your radar, 7% surge. Yes, what's the story there? We're still, trying to find that out. But for now, it's the entire IT pack, to be honest. HCL Tech is also high, around 3%. So there is a bit of a momentum at play there. Nitin, what would be your take regarding the IT sector? Is it the time to start buying, or maybe a month down the lane when the IT numbers will come out for Q3 would be a better opportunity?
Look, I think IT has seen a rally already. We've seen a very significant rally in the last 1 month. if you see all the top companies in the sector. If you go by the commentary that came out from Accenture recently, I think they sort of surprised people with a little more positive results than people were expecting. But clearly, from a recovery perspective, I think it's yet a little bit of a long haul. It's yet a couple of quarters away. So I think there has been a rally, and now this whole rally is becoming rotational, and it's moving down to other large caps, because the mid caps already had done well even prior to this and have actually been delivering good numbers. It was the large caps where there was the concern, and the large caps we've seen a rally in the top names, and now we are seeing happen in others also. But I would be a little circumspect. I would wait for the commentary to come in the Q1 results in January before really, wanting to believe that IT has turned. Because initial commentary and initial, interaction seems to indicate that we are yet a couple of quarters away.
Nitin, there's a lot of talk in the market on whether or not there is the froth building up in the IPO space, given the kind of subscription frenzy that we've had of late. Do you sense that be the case at all? I mean, even though we were just talking up as to, 2021, you had way more IPOs, number of IPOs, and a lot more money raised as well, as opposed to what we've seen this year so far.
Right. No, so I mean, all telltale signs, if you go by anecdotal evidence, right? You pick up a newspaper and you see the amount of pages that are being devoted to IPOs. All telltale signs make it seem like, and the kind of oversubscription figures that we are seeing, the kind of grey market premiums, the kind of listings that are happening. It's not that the IPOs are coming necessarily cheap, but after that also they are sort of listening. It does seem that there is a lot of liquidity that is chasing the IPO market. And, of course, quality is going to suffer in the whole region. So yes, if you ask me, there is a lot of froth and visible froth that we see in the IPO markets presently. But it's just so much of liquidity that is today, domestic liquidity that is prevailing and is chasing. The other element is, normally speaking, whenever you see, historically, if you see promoters selling, the kind of selling we are seeing in the last few months, or PE and VC money selling, these guys are obviously seeing good prices and wanting to encash on it. So I do believe that there is froth in the market, and one has to be careful.
Okay, Nitin, on that note, we'll let you go. Appreciate you making time and speaking with us. But today we've been speaking with a whole host of corporates as well, and a lot of those stocks are actually reacting, whether it's all cargo logistics, where the management tried to explain their point of view of the entire restructuring and assuage that this is the last of the restructuring that we have seen and the entire transformation is going to be EPS accretive. Or it was GE Shipping talking about the entire Red Sea disruptions and how that's likely to play an impact. And then, of course, we also had other managements as well talking about what's happening to their business profiles as well. Transformers and rectifiers being case in point, wherein they are talking about a revenue of 3,000 crores by FY26. Listen into